In this presentation, we will work a comprehensive problem related to a not-for-profit organization, a non-profit organization, that non-profit organization having two programs, a program related to exhibition and sales of crafts and education about crafts. The information will be on the left side. We're going to enter that information into the blue area on the right side. We're going to enter into this blue area, which is going to be the general journal. In other words, we will be journalizing the journal entries into the general journal here. Then we will be posting those to our worksheet. Our worksheet looking like this. We'll have a beginning trial balance, adjustments, and an ending trial balance. The beginning trial balance is going to be the starting numbers that we will have, of course. We will then post here to the middle column in a similar fashion as we would for adjusting type of entries, as opposed to posting to a general ledger. This giving us a very quick and easy look at the transactions in relation to the accounts and the accounts in relation to each other, then getting the ending balance after that transaction. The accounts will be in order, assets in green, liabilities in orange. Then we have what would be, this is where the difference really happens, or the major kind of differences, of course, within the what would be equity section in a for-profit organization now being the net assets section in the not-for-profit organization. So we have the net assets similar to assets minus liabilities, equity type of section, same as basically the income statement rolling out or closing into what would be the equity now closing out into the net assets. However, within the net assets now, new thing, different thing, not-for-profit, now having to break out between net assets without donor restrictions, net assets with donor restrictions, and then we have net assets with donor restrictions related to a permanent endowment, in this case, basically permanent restriction. And then under that, we're going to have income statement type accounts, or similar to income statement accounts, those temporary accounts, those accounts that would then close out in a for-profit organization to the equity account, here closing out, of course, to the net position accounts, starting with what would be similar to the income statement type of account. However, here the income is going to be contributions. So contributions, and also breaking them out between contributions with restrictions and contributions without restrictions as well in the income statement type items. We're going to know that we are going to be in balance if we scroll down to all the temporary accounts by the green zeros. If we're debits equal the credits, we'll have green zeros, and we will then be in balance. Once we do this, we will then make the financial statements. We'll be doing this in a future presentation, taking the ending trial balance and creating the financial statements. We'll also do the closing process as we go through this worksheet. So let's take it one step at a time. We're going to start off with number one over here. We're going to scroll back over all the way to the left. We're in cell B3. We got the two programs that we've just taken a look at. So now we're going to consider number one. As we go through these, I'm going to highlight these. I'm going to make them green. The green items represent the items that we are currently working on. The next thing we're going to do is hide a few columns. So you'll note that we have two sets of the general journal. We want to just keep the first set for now. We want to hide the second set, and we'll be working on that in the future once we run out of space on the first set. So to hide this, we want to hide from column K to column O. We're going to put our cursor on column K so it looks like this. We're going to select the entire column. We're going to left click on it and drag over to column O, let go, then put our cursor on the selected area and hide those cells. So now we have our information right next to the general journal, and we can go through and start to post these. So we're going to say number one, we're going to group all this together. You can think of this as separate type of transactions and break them out in separate type of transactions. If that's easier for you, we're going to group them up in one transaction here. These are going to be the revenue type of activities we have for the time period. So we've got the grants first. And well, the first thing we're going to say is all this is going to be cash, unrestricted cash received. So cash is cash. It's going to be the debit. It's going to be going up. Cash is what it is. It does what it does. It goes up with a debit. So that's going to be the same as a for-profit type of organization. Easy to do. Then we got the grants. Now we have grant money of the $12,900 that increases cash. However, $5,100 of it was earned in the prior time period. In other words, $5,100 of the cash we got this time was in the receivable from the prior time period. So that means that we're going to have a credit of the income type of account. The income type of account for us is going to be the contributions. It's going to be contributions without donor restrictions. And then we're also going to have an increase of that receivable. So we can record that now. I can think about that now and say, all right, that's going to be similar to the income type of account, which is going to be the contribution without donor restrictions. The contribution without donor restriction is going to be a credit balance. It's going to be equal to, and I'm going to pick up the grants of the $12,900. That's the total cash we got minus the amount that was receivable portion of it. So that's going to be this number. I need to make it negative then. So I'm going to double click on it. I'm going to put a negative in front of it and then bracket that number. And then the negative, then the second part of that, of course, is the receivable that needs to go down. So we're going to say the receivable is here. And grants receivable, it needs to go down. It has a debit balance. It's going to go down by, I'm going to say negative for a credit of that 5,100. So it's going to go down by the 5,100. The next one we have is the fund drive and unrestricted gifts. This is also a revenue type of account. So it's also going to be increasing this number here, the contributions without restrictions. So I'm just going to add it to this number. I'm going to double click on it. I'm going to go to the inside of it, inside the brackets, and say plus, and pick up that number. So now this revenue type number is this plus this minus that. And then we have the member dues. This is going to be a form of revenue, but we're going to break it out into another account called member dues. So we're going to say this equals, and we're going to pick up member dues down below. There's member dues, and enter. And then we'll pick up the amount, the dollar amount. It's going to be a credit because it's a revenue type of account. It's going to be a credit, negative of that $16,785. So there we have that item. Then we have the tuition and fees for the workshop. So we have our workshop, tuition and fees for it, another type of revenue account that we're going to break out in a separate account. So we'll scroll down to the tuition and fees. And then the amount for the tuition fees is also going to be a credit. So I'm going to say negative in the credit column. That's $7,084. So the next thing we have is sales. Now, we're not selling anything that's really ours, our product. What we're doing here on sales is we're going to have people that create crafts, and then we sell their crafts, kind of like on a consignment type of basis. So it's not our sales. We're facilitating, in essence, the sales. We collect the sales, but we only get to keep the commission earned, which is going to be 20%. The rest goes to the people that made the crafts. So you can see it's kind of like a consignment type of basis in that format. So what we are earning here is 20% of that 12,230. So we're going to say that our earning on the sales is going to be equal to, and we're going to pick up the commission that we're earning, commission revenue, and that's going to be equal to, I'm in I8, I'm going to say negative of this 12,230 times the 20%. That's going to be our commission amount. That's going to be the 2,446. And then the difference between those two, the 12,000 and our commission amount, we have to pay back to the craftsman who actually did the work. And that's going to be a credit to a liability account that we owe to the craftsman. So that's going to be the payable to the craftsman. And enter. And that's going to be equal to, we could say, this 12,230 times 80%, or this minus the 2,446, and enter. Note that this number is in error. The number should be, if we take a look at it, we're going to say that it should be the 12,230 times 0.8, because if 20% was commissioned, then the 80% is what needs to go out, or the 9,784. The other way we can think about it is that if we have the 12,230 minus the 2,446, the commission amount, and then we should get to that same 9,284. And of course, what went wrong with this formula? We have a minus sign here, so this is a positive number minus a negative, which means it added the two and flipped the sign. Now this is going to be still kept at the 14,676 as we go through the problem. At the end of the problem, then I'm going to go back and adjust it. So what I suggest doing is noting it, making it yellow, put it in the books now at 14,676 so that all your numbers line up as we work through the problem. Then at the end of the problem, we're going to go back and adjust this number. So just be aware that it should be 9,784, but we're going to keep it at the 14,676, work through the problem, adjust it at the end of the problem. This is what I recommend doing. I need to make that a credit again because it's a liability that's going up. So I'm going to double click on that, go to the front of it, negative sign, and then put brackets around it. And that's the cash that we're going to get then. So then the debit then is going to be the negative sum of those cash sources. So there we have that. Now again, we broke this out. We put this in one journal entry. It might, if you want to break it out into multiple journal entries, you can. If you want to consider the grants you received in this time period, you could take the 12,900 minus the 5,100 debit cash and credit the contributions without donor restrictions. Then the amount that you got from the receivable, you can make a completely separate journal entry debiting cash and crediting the accounts receivable. Then the fund drive and the unrestricted, you can make a separate transaction debiting cash, crediting the contributions without donor restrictions. Then the member dues, you can make a separate transaction, which would be debiting cash, crediting the member dues revenue account. Then the tuition and fees, you can make a separate transaction, debiting cash, crediting the tuition and fees. And then the sales, you can make two transactions. One would be related to the commission, in which case you can debit the cash and credit the commissions for the 2,446, which is the 12,240 times 20%. Then you can make another transaction, which would debit cash for the 14,676, which would be 80% of the 12,230, or the 12,230 minus the 2,446. And then you can credit the craftsman payable, because that's the amount that we don't get to keep as the not profit, but need to pay back to the craftsman. So now let's record this transaction. So we're going to scroll over and we're going to record, here's the cash. We'll record the cash first. So we're going to scroll over to cell R3. So within R3, we're going to say equals, and then left click over to the 67,872 and enter. So that increases our cash. Then we're going to go to the contributions without donor restrictions. That's going to be down here, contributions without donor restrictions in cell R16, where we say equals. I'm going to go left, I'm going to scroll up, pick up the contributions without donor restrictions and enter. That goes up in the credit directions, representing the fact that revenue is going up, with a credit represented by the negative numbers or the bracketed numbers. Then we're going to have the grants receivable. That's up top. We're decreasing the grants receivable because we got cash and decreased the receivable. So we are in R5 equals, and we're going to scroll over to that 5,100, bring in the receivable down. Then we've got the member dues that we're saying we received during the time period. So the member dues is going to be down here. We're in cell R21 equals, and we'll scroll back up to the member dues where we have the credit of the 16,785 and enter. So that's an increase in the credit direction. This is revenue type of account. Then we have the tuition. So tuition and fees. So we'll scroll back up and pick up the tuition and fees. That's going to be in R22. So within R22, we will say equals. Scroll back up to the tuition and fees at the 7,084. Next, we have the commission revenue. So the commission revenue. So I'm going to scroll back down. We'll pick up the commission revenue. That's going to be in cell R23, where we will say equals. We'll go left. We'll scroll back up. We'll pick up the commission revenue and enter. So that goes up in the credit balance. And then we have the payable. So now we have the payable to the craftsman. So we have the payable that's going to be down here in R12, where we say equals, and scroll over to that 14,676 and enter. And that should put us back in balance. So we're back in balance, and here's the change in like the temporary account, similar to the income statement type account, similar to net income. Okay, let's take a look at the next item. What we're going to do is we're going to ungreen this one, And then we'll make the next one green. We'll make the one green, which is the one we are working on. So the next one we'll make a green like so. Number 2 then says interest on investments without donor restrictions. And then we have interest on investments restricted for programs. And then we have interest on investment in the permanent endowment. So we have the interest income, 3 types of interest income. One is going to be without restrictions. One and the other 2, in essence, are going to be with restrictions. One with regards to restrictions for the program. The other with regards to the permanent endowment. That's going to be like a permanent donation or investment. Typically, the interest then is going to be needed to be used. It's going to be income for us that will need to be used for a specific type of purpose, and therefore it will be restricted as well. So we're going to say that, let's say number 2, and it's in F11. We're going to say this is number 2. Cash is going to be going up. We'll do this with one journal entry once again. So we're going to say cash is going to be increasing. Scrolling up to cash is going to be the debit. And then we're going to have the credit. It's going to be a type of income. We're getting investment income, and we need to break them out between with donor restrictions and without donor restrictions. So we're going to have investment income with donor restrictions. And then below that, we will have investment income without donor restrictions. And then the numbers we're going to pick up here, we're going to say the donor restricted items will be equal to negative of these 2, because this is going to be income type of account. So we're going to credit these 2 are going to have restrictions. Restrictions by program, and then the restriction on the endowments. The one without restriction, of course, will be this item. So I'm going to say negative of the 688. And then we'll say that the cash is going to be the sum of those 2. I'm going to do that with a negative sum function, the plug function, the plug formula. And there we have that. So there's going to be our journal. So let's post this out. Going to scroll over to cash first. Here's cash. Here's cash in our worksheet up top. And we are in R3. I'm going to do this with the keyboard now. I'm going to say F2 to go into it. Then plus, then F2 so I can scroll down without using the mouse. And then we'll scroll over to that 1,991. And then we want the investment with donor restrictions. So investment with donor restrictions is going to be down here in R19 equals, and I'm going to scroll over to that 1,303. Then we have the investments without donor restrictions. That's going to be right below the item there. So now we got investments without donor restrictions. This is going to be equal to, and I'm going to pick up that 688. So now we'll scroll over and we'll ungreen this item. So number 2 has been completed. I'm going to select that. We're going to ungreen that one, and we're going to go then to number, and we'll make this one green. So I'm going to select that item. I'm going to make that green. And there it goes. And then it says grants receivable increase 5,260, amount earned in the current year, and therefore with no donor restrictions is going to be the 3,240. And that means the difference between the 2 is what wasn't earned in the current year, and therefore we haven't yet earned those grants. So we're going to put that into deferred revenue at year end. So it's going to look like this. We're going to say number 3. And we're going to say that we have the grants receivable is going to be increasing. We're going to increase the asset of the receivable. So we'll say grants receivable is increasing. Then we're going to say the amount that we have earned is going to be contributions without restrictions. So that's going to be our income type of account. Contributions without restrictions. The amount that we have not earned, we're going to say is deferred revenue, kind of like unearned revenue, deferred revenue. We have that in a liability type of account. So we're going to say this is going to be equal to the deferred revenue. And then we'll record this item. The amounts then will be, I'm going to say the contributions with donor restrictions is going to be equal to the 3,240. The deferred revenue will of course be the 2,020. And then the receivable that we have on the increase is going to be the negative sum of those 2. So that's going to be the 5,260. So now we'll post this one out. We've got the grants receivables. I'm going to scroll to the right and we'll find the grants receivable will be up, of course, in the asset type of area. We're going to be in R5 within R5. I'm going to double click on R5. We're going to go to the end of it and say plus. I'm going to put the cursor back down with the mouse and scroll over to that 5,260. That increases the amount for the grants receivable. Then we're going to go to the contributions with receivable without restrictions. Contributions receivable without restrictions, our main kind of income statement similar type of account, is in R16. Within R16, I'm going to double click on it, go to the end of it. Then we'll say plus, and I'll point to that 3,240, increasing that amount by 3,240. Then we have the deferred revenue, kind of like unearned revenue. We have not yet earned this revenue for the grant. We're going to put that up top in cell R11. Within R11, a liability type of account. It's going to be going up in the credit direction given the fact that it is a liability account. Picking up that 2,220, bringing it from 4,000 up by 2,220 to 6,220. Let's see what we have next. Well, let's check for back in balance here. If I scroll back down, we are in balance. We have the green zeros. That's a good sign, so we're good to go. I'm going to scroll back to the left and ungreen number 3. So we're going to right click on that. We're going to ungreen number 3, and then we'll go and move it on to number 4. So number 4 is now the green one. That's the one we're working on. We're going to say here that the building rent is provided. So there's building rent that's going to be provided for our service for the nonprofit. We're not paying rent, in other words. Therefore, we have to estimate the value of the rent so that we can then record that value for us. So we're going to say the value per year is going to be the $19,100. We're going to record that as, in essence, a form of revenue, a form of contribution, and then the expense related to it. So we're going to say that number 4 is going to be some type of revenue. I'll put the revenue first because that's in essence what we're getting. We're getting something other than cash. We're getting the use of a facility. We're getting the rent on it as a contribution. So we're going to say that's going to be a credit, kind of like revenue, but we're going to pick up our revenue account of contributions without donor restrictions. So obviously it's without donor restrictions here. Obviously we're going to have to use it as a building because that's the kind of function of the thing that we got. But there weren't any restrictions on, in essence, the rent that was given, therefore without restrictions. And then we're going to say that the debit is going to be the rent expenses. Rent expenses is going to be the debit. We're going to record the expense and the revenue. And you can think about this as if it was basically, if we got cash, it would be, in essence, we got cash and then we paid for the rent, right? It would be two types of transactions. And here, we're just kind of combining them together. One transaction, no cash involved. We got a donation, in essence, of just the building usage, and therefore recording the rent expense and the revenue with the one transaction. The amount will then be that $19,100. That'll be the debit and that'll be the credit. Then we can record this one out. We got the rent expense. I'm going to scroll down. The rent expense is going to be here in P27. So we're going to record it in R27 and say that that will be equal to, and then scroll over and pick up that $19,100. Then we have the contributions without restrictions. That's going to be our major type of account that's on the income similar account, statement of activities type of accounts, and our revenue type of account. I'm going to be in R16. I'm going to go in here this time by saying F2 on the keyboard, plus F2, and then I'm going to scroll back down with the arrows once that has been done. There we have that. Let's see if that puts us back in balance as it should. It does. That's good. And now we'll scroll over and pick up number 5, or see what number 5 says at least. I'm going to right click and ungreen number 4, and then we'll go ahead and green up number 5, the current one we're working on. This is where we're going to record our expenses. We're going to do this with one transaction so that we can do this kind of quickly. You can imagine, of course, these expenses taking place as we go through the time period, recording the normal type of transactions related to salaries expense, utilities expense, printing, and so on and so forth. Again, we're going to combine them together to make a simplified type of problem, or get through the problem a bit quicker for it. If you want more information on recording the individual expenses, you can take a look at the financial accounting courses with that. But this is going to be the same kind of concept as a for-profit type of entity. So we're going to scroll back up top, and we're going to go to number 5. We're going to record these expenses. We have salaries expenses. Now note, we're not going to get into basically withholdings and that kind of stuff. You do have to deal with that type of stuff with a not-for-profit organization. But we're just going to record the salaries expenses here in a simplified format. If you want to get into payroll, we do have a payroll course that gets into the detail on payroll. So we're going to go to the salaries expenses, and the next is going to be the utilities. So utilities expense, I'm going to say that's utilities expense. Not in order this time. And then we have the printing. So the printing is what's going to be next. So we'll pick up the printing. And then we have the miscellaneous. So miscellaneous expense. And then we're going to pick up the prepaid expense balance. So I'll put that in place, and then we'll have to think about that one. That's going to be prepaid expense. That's going to be up top. That's going to be an asset type of account, prepaid expenses. And then we have the accrued payable and accrued expenses. So we're going to pick that one up. We've got the accounts payable and accrued expenses. That's going to be a liability account. So we'll pick that one up. Accounts payable and accrued expenses. Okay, so now we can take in the numbers. Now let's scroll down. This is going to be at year end. So let's go ahead and pick up the numbers now. We're going to say that the salaries is going to be equal to the 48,200. The utilities is going to be equal to 3,200. The postage is going to be equal to the 1,530. And then the miscellaneous, we will pick up the 760. Now the prepaid expense, what we're saying here is the prepaid expense balance at the end of the period is going to be 960. So this is basically, we're going to combine in kind of our adjusting entry at this point. So the adjusting entry is what we're basically combining in. So if we scroll up top, we say, well, what's in the prepaid right now? If we go up top, we're going to say, all right, prepaid expenses got 1,240 in it. So let's pull out the trusty calculator. We've got the 1240, and we need it to be, I believe, what was it that we needed to be? We needed to be the 960. So we're going to take that, we're going to subtract out to the 960, and that's going to be the 280 that we're going to need. So we're going to credit this 280 to get it to the 960. This, in essence, is an adjusting type entry. Then we're going to do the same thing for the accounts payable and accrued expenses. So if we scroll back up and we say accounts payable and accrued expenses is currently at, where's my trusty calculator? We've got the 2769 minus, and then we need it to be at, and minus the 2926. So it's 157. So we need a credit of 157. I'm going to say 157. So again, we built this, and then the difference, of course, is going to be cash. So then we're going to say cash is going to be the difference. And that's going to be the assets or the debits. If we add these up, the 53,690 minus the credits, I'm going to do that with, which would be the 437. I'm going to do that with our plug formula, the negative sum formula. And that'll give us our difference. So now if we add these up, we're at 53,690 and the 53,690. So again, if you wanted to think of these as a one-by-one transaction, obviously you could think about these recording them at a one-by-one basis. And then we have the prepaid expenses, which would be an adjusting entry at the end of the time period. And then the accrued payables, an adjusting entry at the end of the time period. So again, if you want more information on that, you can go through the financial accounting course. This is the same as financial accounting information. Okay, so let's record this out. We're going to go to the salaries and salaries expense. That's going to be in R28. Within R28, we're going to say equals and scroll over to that 48,200. Then we want to pick up the utilities. So utilities is going to be down here in R31. Within R31, we're going to say equals and scroll back up to that 3,200. Then we're on the printing and postage. Printing and postage, we are in R30. R30 is going to be equal to that 1,530. Then we need to pick up the miscellaneous expense. So the miscellaneous expense is going to be down in R33, where we will say equals, scroll back over and pick up that 760. Then we have the prepaid expenses, and that's going to be an asset type of account. So we're going to scroll up and we're going to say prepaid expenses is in R6 equals, scrolling back down to pick up the prepaid expenses of that 280 and enter. That brings it to 960. Let's double check if that's what it's supposed to do. If we go back down It's supposed to be at 960, so that looks good. And then we're going to post the accounts payable and accrued expenses, and that should leave us with 2,926 in that account. So we're going to go to the accounts payable. That's the liability account up top. We've got the accounts payable and accrued expenses. We are in R10 equals, and then we'll scroll down and pick that one up. We're going to pick up the 157 and enter. And that brings us to the 2,926. Obviously, if we scroll over and double check that, 2,926 looks good. And then we're going to go to cash. So cash is here. We're going to scroll up to cash. And cash is up top. And we are in R3. So I'm going to go into the cell by saying F2 plus F2. And then we'll scroll down and pick this one up. So we're going to scroll back down. We're going to pick up the cash of the 53,253, enter. So there we have that. And if we scroll back down, we should be back in balance indicated by the green zeros. Now let's go back over. We're going to ungreen number 5 and we're going to move on to number 6. So we're going to ungreen number 5 and we'll move on to number 6. So let's make that one green. Let's see what we have here. Says that we have short-term investments that are sold. The proceeds are used to purchase computers and printers. Resources used were restricted for purchase of equipment. Okay, so this looks pretty straightforward, but there's a few things that are going to be going on here. We have the short-term investment, which of course we sold. So that's going to be one transaction. That's pretty straightforward. We're going to get cash. We're going to sell the short-term investment. So we're getting one asset cash. We're selling the other. Then we purchased equipment with it. So we purchased the equipment for that 2,855. So we purchased equipment for 2,855, and we had some restrictions that were on us related to the purchase of equipment. And now we've purchased equipment, so we want to make sure that we unrestrict then those resources that are restricted given the fact that we have met that condition at this point. And remember, when we think about that, we always want to unrestrict whenever we meet the condition, so that our goal as the not-for-profit is to unrestrict the resources so that we can use them at some point in time. So we want to make sure to do that whenever possible. So let's record this one by one. There's going to be 3 transactions. The first one's going to be the sale of the investment. So we're going to get cash. We're going to sell the investment. Obviously, the investment is up top. We have the short-term investment. It's on the books for $13,111. And we sold part of it. So we sold part of it, $3,500. So we're going to scroll back down and we're going to say number 6. We're going to say that cash is going to be equal up top. We're going to get cash. We sold the investment to get cash so that we can then purchase equipment. And then the other side is going to be the short-term investment. That's going to be the asset that will be decreasing. Short-term equipment will then be going down. The amount then is going to be equal to, scrolling back down to the amount, that $3,500. That will be the debit and that will be the credit. We'll then post this one out. So cash is going to be first. Cash will, of course, be up top. It's going to be the top account up top, our favorite account. We're going to be up top in the cash. We're going to be in R3. I'm going to say F2 plus F2. And then I'm using the arrows to scroll back down and pick up the cash amount. So scrolling back down to pick up the cash amount of the $3,500. Next, we have the short-term investments that we will record. So I'm going to scroll back up. We're going to pick up the short-term investments in R4. Within R4, we will say equals, scrolling over, scrolling back down. And we will then pick up the short-term investments, $3,500. So there we have that. And then we should be back in balance down below. So we have the green zeros indicating that we are indeed back in balance. Next, we're going to have 6B, we'll call it. Let's call it 6B. And that is going to be when we purchased equipment now. So we purchased equipment similar to a for-profit, same as a for-profit. We're going to debit the equipment. It's going to be a long-lived type of asset that we're going to have. Therefore, we're going to debit an asset type of account rather than an expense type of account for that purchase. So we're going to debit the equipment. Not an expense, but an asset, because it's something that we're going to have to depreciate, allocating the cost over the useful life, as is in accordance with the matching accrual principle. And then the other side is going to be cash. We're going to pay cash for this equipment. That's why we sold the investment, so we have the cash to do so. And so we're going to credit the cash, and the amount then will be equal to the purchase price of the $2,855 on the debit and the credit. So let's record this one out. Here's going to be the equipment. That's going to be a debit. That's going to be up top in the asset section. So within the assets, we see the equipment. We are in R7. Within R7, we're going to say equals. Scroll back down, looking for that equipment account. We're looking for you, equipment account. There it is. And we're going to pick up that $2,855. Then the next one is going to be cash. So we're going to scroll back up top. That's the first account we know. And that's going to be in R3. So within R3, I'm going to say F2 plus F2. Then scroll back down and we'll pick up that cash amount of the $2,855. There we have that. If we scroll back down, we are back in balance once again, given by the green zeros. Scrolling back over, now we're going to go to 6C. Here's kind of a new thing. This is the new thing that happened. We had a restriction on assets and they were restricted for the purpose of purchasing equipment. We have now purchased equipment, and therefore we want to use that purchase function to release the restricted assets now. So to do that, we're going to have to use these two accounts, you'll recall. Net assets released, satisfaction of purpose restriction without donor restriction, and then the same thing with donor restrictions. So keyword without and with donor restrictions. So I would think about these as kind of income statement type of accounts. And if you think of them kind of like a fund type of account where we have it's going out of one fund and into the other fund kind of thing, this is going to be an income statement. You can think of it as an income statement account on both of them. The one with restrictions is going down. Income statement accounts have credit balances. Therefore, to make it go down, we would debit this one with restrictions because we're then going to increase the one without restrictions. So the one without restrictions is going up. It's kind of like an income statement account which has a credit balance. Therefore, it's going up in the credit direction. So it's pretty straightforward transaction once you do it a few times, but you want to, make sure that you have the right direction that you're going on these. The one without restrictions is going up and therefore will be credited because I would think of it kind of like an income statement account. The one with donor restrictions is going down because it's kind of like an income statement account and we're decreasing it. Okay, and then the amount is going to be the same as that $2,855 that we spent, not the amount that we took out. The amount that we actually spent is going to be that $2,855. There's the transaction. Let's post this one out, and this one, of course, will make more sense when we look at the statement, or kind of similar to the income statement, the statement of activities, because we'll see the two columns that will be broken out and see the activities for without restrictions and with restrictions, and then this transfer between the two. Okay, so then we're going to say that the one without restrictions is going to be the credit. So that's going to be the credit. And also you'll note that I didn't make this cell really long or try to wrap the cell or anything funny. We're just going to type the name over it. So that should work. But if you have any confusions on what account this is, you got to look at where it came from. P26 is this one with restrictions, right? And the other's without restrictions. Okay, so then this one with restrictions is going to be equal to, and we're going to go down to the one with restrictions, which is going to be the debit. And there we have it. Okay, so that puts us back in balance, it looks like. That looks good. Green zeros are nice. And so we're going to scroll back down. We're going to say number 6 has been completed. And that is good. I'm going to ungreen number 6. We're going to move on to number 7. So we'll go ahead and make that one green. I'm going to make that green. Now, as we do so, we're running out of room in our worksheet. So I'm going to unhide some cells so we can then keep on moving to the next set of cells. So we're going to unhide these cells between I or J and P, between J and P. So I'm going to select like I because it's easier than J. And then left click and scroll over to P, let go, right click on the selected area, and then we will unhide that selected area. And then we're going to be on number 7. That's going to be our new account that we will be working on. I'm then going to hide these ones. We don't need these from F to J. Those are the ones. These ones I'm talking about. So I'm going to left click on F. I'm going to scroll over to J, F to J, let go, right click that selected area and hide those cells. So now we've got the new worksheet that we can work right next to the data and right next to the trial balance. So now we'll scroll back down to number 7. Number 7 says income earned by the endowment was used to provide craft education per terms of the endowment. So the endowment, you can think of it as a permanent fund that was given. We're going to get but the interest on the funds, and the interest on the fund was restricted. So we have to have the permanent fund on there all the time, and but we get to use the interest on it. The interest that we earn on it then is used for a specific purpose in accordance with the endowment, that purpose being education. So now we're going to take that money, we're going to use it for education, and in so doing, we will be unrestricting that money, and therefore we'll have to record the fact that it's going to be unrestricted because we fulfilled the purpose for which it was restricted for. So there's going to be 2 transactions, one recording the education, the cash that is spent for it, the second to unrestrict the assets that we used for it because we were in compliance with the terms of the restriction. So that means that we're going to say cash is going to go down and the debit is going to be the education. So we're going to have an expense type of account, which is going to be something like community education. So that's going to be the service we provide, community education. And then the cash is going to be going down. Cash will go down. The amount is then going to be equal to that 945, was it? I believe I'm going to say 945. So that's it. So we got the debit and the credit there. So let's record this out. We got the community education. So we're going to scroll over and pick up the community education. So that is going to be here. We are in cell R24 equals. Scrolling over, scrolling back up. We're going to pick up that 945 and enter. Next, we have the cash. So cash is going to be the second account. That's going to be in R3. So within R3, there's something in it. So I'm going to say F2 plus F2 and then scroll over to that 945 and enter. So there we have the first half of it. The next one I'm going to call 7B. 7B. And that's going to be the release of the asset from restricted terms once again. So we're going to say these 2 accounts down below. And remember that these 2 accounts, I'm going to say kind of like income statement accounts. The one without restrictions is going up. And it's an income statement account. It has a credit balance. Therefore, we're going to increase it with a credit. So one without restrictions, because we've unrestricted, is going up. And so we're going to credit that one. And then the one with restrictions is going to be going down, and it's kind of like an income statement account. It has a credit balance. To make it go down, we would debit it. So that one's going to go on top. The amount is going to be the same, the 945. So then if we scroll back down and post that one, we're going to say the one with restriction, that's going to be the debit side in R26, F2 plus F2. Then I'm going to scroll back over. We're going to pick up the debit of that 945. Then we're going to look for the credit of the 945. That's going to be in the without restriction one. That's in R26, F2 plus F2. Scrolling back over, and we're going to pick up the credit for the one without restrictions. And there we have it. If we scroll back down, that should then put us back in balance, given by the green zeros. And I'll scroll back up, and we're going to then ungreen number 7. And let's do number 8. Moving on to number 8, which is depreciation expense. So this is going to be a straightforward kind of adjusting type of entry that we would see in a for-profit type of organization. Same type of item here. So we'll record that adjusting entry. And remember what we're doing, we're allocating out the depreciation. We're not going to get into a lot of calculation of the depreciation. If you want to think more about property, plant, and equipment and depreciation, we do have a course on that. So we're going to say that the standard journal entry to record depreciation is typically going to be depreciation expense. And that's going to be depreciation expense. And this is going to be an accrual-based recording, allocating the cost over the life. And then we're going to call it the other side, allowance for depreciation. which is a little bit different than accumulated depreciation, which you typically would see in a for-profit, but same concept, same idea. They just have to make things slightly confusing with the change in terminology. So we're going to scroll down and we're going to pick up that 1,762. That'll be the debit and the credit. So the depreciation expense, we'll record that one out first. Going to scroll down to the depreciation expense. That is in cell R5 or 35, R35 equals, and then we'll scroll back up and we will pick up that 1,762. Then we want the allowance for depreciation. Allowance for depreciation is going to be in R8. Within R8, we're going to say equals and point to that 1,762, bringing that up in the credit direction, which of course brings the book value down to 12,800 minus the 4,308 where it was. Now the last thing we're going to do for this presentation is go back and fix the error that we made in the first transaction. And so to do that, we're going to unhide these cells. We're going to unhide these cells by putting our cursor on L. I'm going to scroll over to D, let go, right click on the selected area and unhide. And then you'll recall that back here in number 1, we said that we had this amount at the 14,676. It is in error. So now we're going to go back and fix this amount. So we're going to go back and fix this. You'll recall that we said that the 12,230 was sales that were received. 20% is what we get in commission. 20% is this number. And therefore, this number should be the 12,230 minus the 2,448, or you could think of it as 80% of that 12,230. The formula here is in error because it tried to subtract out these numbers, but this is a negative and that's a positive, and therefore it added those numbers. So all we need to do is adjust this to a plus sign, and that should adjust it. So then that should adjust it out. The sum of these two, 12,230, if we check the sum, that would be a nice way to check it. We should have done that the first time. Would add up to the 12,230 here. So we got the 20% and the 80%. The other way you can kind of think of it or check it if you wanted to calculate it this way is to say that 12230 times 0.8, that is what we're going to have to owe out. If 20% is the commission, 80% is what we're going to have to pay back out. There's the 9,784. So then I'm going to scroll back over. That should adjust our numbers to here. And you can take a look at those ending numbers at this point before we move on with the problem. This is where we are at this point. And here's our bottom line, kind of net income similar type of number, which is all the temporary accounts, the blue accounts.